Hey, good afternoon. This is Mayor Valensky with Driving Markets. Okay, let's kick off. So China's trade dropped by 7.5% when it was expected to drop 0.4%. That is a major drop. Now, the reason why I say that is quite important because China is striving to become the #1 economy in the world. However, China is not going to be the same China that saved the world in 2008, 2009, 2010 at the time of the banking crisis. If you recall, there was a massive recession after Lehman's, Bear Stearns and the banks went bust in the US, in Europe, UK, Canada, Australia, across the globe. And China came to the rescue around about 2010 with its massive surge in growth. They absolutely imported huge amounts of raw materials and they effectively saved the global economy. They invested hugely in the infrastructure. They invested hugely in properties, in commercial property, and obviously in the economy. And they became a leading force, looking to take the #1 place over and above the US. Now, that is not going to happen this time because China is in trouble. And if China is in trouble, that is a very bad indicator for the rest of the world. Why is that? Because America is not as strong as it was 5 years ago, 10 years ago, and 20 years ago. America, the USA, is in a much weaker position. Their infrastructure is not up to speed. Their overall service levels, their overall commercial activity is being taken over by the Far East. So you've got a lot of competition where America is not up to scratch in coping with that competition. The problem is now that as the world goes into recession, and it is going to go into recession, what you're going to have no individual country or any particular rescuer or saviour is going to come along and save the global economies. The economies are going to go into recession. So you may well ask, then why is the Nasdaq so high, and why is the S&P at the highest since August 2022, and why is the Dow going up, and why is everything going up? Because it's a narrow based rally. It's based on technology, especially now it's based on the AI, artificial intelligence, ChatGPT arena. So any company, any operation that gets involved in AI is going to make a lot of money. However, the rally in the markets is narrowly based. It's not broad based. There are more and more regular everyday companies that are simply not making it, or if they're not failing, they're cutting back enormously on costs, on staff, and downsizing because they simply cannot cope with the present day economic environment or climate. So therefore, what's going to happen is follows. So you're going to have a continuous narrow based rally on the Nasdaq going into a bull market. That's not going to impact the rest of the economy. And as jobs now ease, and they will start easing, that is going to have a further effect on loan payments and mortgage payments and car payments. In fact, second-hand cars in the US have dropped significantly in value due to the reduced demand and obviously due to the high interest rates you have to pay on car loans. If you recall, it wasn't more than a year and a half ago where second-hand cars were worth more than new cars because there was not enough supply on the market. That's now being reversed. What you do have now is you've got a larger supply, lower demand, higher rates of interest to pay on car loans, and that has damaged the second car market, the second car sales market, second car market, okay? Second-hand car market. So that's already deflated a whole area of the economy, and that's going to continue going forward when you've got other areas of the economy are going to be impacted by higher interest rates. Australia on Tuesday raised interest rates out of the blue, totally unexpected. It was a 3.85% present rate. They increased it by 25 basis points to 4.15, correct? 4.2. Yeah, no, 4. Let's work that out. 4.1. Yeah. So the interest rates have moved up to 4.1%. Sorry for that mathematics. When you're doing a live video, you have to quickly think. So it's 4.1%. That was out of the blue. New Zealand raised interest rates out of the blue, 2 weeks ago. So you could see more interest rate rises somewhere like in the States or in the UK or in Europe. Inflation is not over. Inflation is going to continue rising, and that is going to impact overall markets and obviously liquidity and people spending. So you're going to have further drops in financial markets. So one of my colleagues, Phil, is saying, but we're in a bull market. We're not there yet. Correct. We're not there yet. But when the market does turn and it's been overbought and overdone, then there will be a turnaround. Moving on to Binance and Bitcoin. Bitcoin jumped up from 25,400 to 26,400 overnight. Looks like that the Binance hopefully will come out of this SEC investigation because they are the #1 exchange. However, if Bitcoin falls below 25,000, then the next level that's going to be supported at is going to be the 19,000 level. Regarding other aspects, foreign exchange markets, I've said yesterday, dollar yen looks like a good buy up to 145. 150. Cable is under a bit of pressure, but I do expect cable to move up to the 125, 126 level, especially if there's a more increased smell of rising interest rates in the UK, which there will be because inflation there is absolutely stubborn. That's more or less it for now. You can share, subscribe, comment. You can follow me, and you can also follow me on Instagram and on TikTok. Meir Walensky with Driving Markets. Have a good day.